Hello, this is Marty Davenport with First Community Mortgage, and this is your Middle Tennessee mortgage and real estate update. Today we're going to talk about your credit score and how you can improve it. But first, let's touch briefly on why credit is important. Well, of course, anytime you borrow money, whether it be through a credit card, car loan, or a mortgage, they're going to look at your credit, and your credit score is going to be a factor in your qualifying, your terms, and your interest rate. So very important there. But also when you apply for insurance, they're going to look at your credit rating. And even sometimes when you apply for a job, often employers are going to look at your credit, especially if you're taking a position where you'll be handling money. So improving your credit score is a major factor in our modern society. Now let's look at what a credit score is, though. Credit scores range between 350 and 850, with most people falling in the 500s to high 700s. As you see here, if your score is in the low 600s, you're in the danger zone. There are things that need to be done to improve your credit. It could be updates, removing errors, or it could be paying off some delinquent debts and some other factors. But if you're in the 700s, you're doing really well. And I'll tell you, above 741, it really doesn't matter how high it is above that, because 741 or 841 is nothing but bragging rights. If you're above 740, you're as good as you ever need to be. Now, where does your credit score come from? Well, we have three bureaus. We have Experian, TransUnion, and Equifax. These three bureaus use a credit scoring model to score your credit history and to give you your credit score. In the mortgage industry, when we pull credit, we pull what's called a tri-merge credit report that gives us all three scores, and then we use the middle score when it comes to qualifying. Now, how can you improve your credit? Well, to do that, you have to know what factors affect your score. 35% of your credit score comes from your payment history, simply paying your bills on time. We all know that. But it can be other factors as well, such as collections and judgments that can impact your score there. 30% of your credit score comes from your outstanding balances, the amount of money you have borrowed at that time versus the credit limit. We're going to talk more on that briefly. The third factor is going to be your length of credit. How long have you had credit? Borrowing money for 20 years versus borrowing money for 20 months and having that depth of credit, it's definitely the longer is the better. 10% of your credit score comes from the type of credit. Having a mortgage, a car loan, a credit card, a good mix. Really not that big a deal, but it is factored in that scoring model. And then 10% is from the number of inquiries in a set period of time. Now, people really focus on inquiries, but I tell you, if your credit inquiries are what's dragging your score down, then you have other issues as well, because just inquiries are not going to be enough to really mess up your credit score. It's only 10% of the entire model. So let's look at a pie chart to show these chunks of effect on our credit. 35%, that's a big chunk. But look here, 30% of outstanding balances. That's a big part of your credit score. Now, what does that mean? Well, let's say you have a revolving credit card, revolving account, that has a credit limit of $1,000. Well, if you keep your balance below 30% of it, $300, that is ideal for your credit. That's going to give you the most boost, the most bang for that account. Well, what about if it's around 50%, just under 50? That's still good. Not quite as good as 30%, but it's still good. But once you go over 50%, it starts dragging your score down. It's actually going to depress your credit score and hurt your credit rating. The closer you get to your credit limit or go over your credit limit, it's almost as bad as making a late payment. I've really never understood why credit cards allow people to go over their credit limit, considering the impact it has on their score. This is a major factor and something that's little understood in credit optimization. Call me anytime at First Community Mortgage at 615-400-4186, or you can find me online at www.martydavenport.com. I have a lot of credit information, and I can help you analyze your credit and come up with a plan to get your score where it needs to be, to help you qualify for a home loan, but also improve your financial life overall. Give me a call anytime. I look forward to speaking with you. Thank you.